Good afternoon, traders. This is the daily market breakdown, techno analysis, where I break down QQQ and other big tech stocks for you guys and give you guys a outlook of what I will be looking at in the upcoming days and where the support and resistance is. All right, let's get started. So this is QQQ, and here we go again. We have a flat day where it's been as flat as it gets, and we are down 0.05 today. Yesterday, we're up 0.01%. So it's as flat as it gets. And what I'm looking at is still this megaphone looking pattern. It's been 2 weeks, and we're still trading within it as support and resistance. Higher highs with no follow through, higher highs with no follow through. We just come back down, lower lows with no follow through. It's essentially what megaphone is. And I just from looking at it right now, I'm seeing another smaller megaphone within the megaphone. I'm just going to draw it real quick for you guys. See right around here. Roughly like that. So there's another visual guide of another mini megaphone within our bigger megaphone. So what I want to see is this one breaking first. And once we break, then we can go back to using this one. And so right now it's this small one. And we're likely going to break tomorrow based on my predictions. I don't have a crystal ball, but based on a Tesla earnings after hours, down 5%. And Elon talking about, I just finished listening to his earnings call, and he was talking about economic headwinds, storms for at least a year, and all these other bearish sentiments that we already know of. But it feels like the market almost forgotten about it after such a bullish move up from March. And we're just been chopping around here a lot, and market just has been very, very indecision. It's just like if we gap down, it's just going to bounce. If we gap up, we just drop, and then we end up in a day flat, literally flat, and not a lot of volume either. So once we get fear rolling in, likely there's going to be volume picking up, or the other way. I don't really see us breaking up, to like if we do break up this level, we're heading to 330s for QQQ. I may be wrong. Like maybe we get one last pump before our market starts dropping. But so far, this kind of action where we just chip chop all day with no indecision is a sign of a temporary top. That's usually what happens. And who knows? Maybe the market makers is like, all right, we got all these bears been shorting here accumulating to just squeeze them out, and then we'll get in the shorts. That could happen. Anything can happen in the market. But as of now, I'm betting on this being the temporary top. I am still holding my SOXX short in the semiconductor sector, as I've been telling you guys for the past couple weeks. And I'll go into that chart in a second once I finish breaking down QQQ. And so as of now, this is after hours. We are down 0.3%, 29, same thing. And yeah, we're down more than the actual cash open day, because Tesla is bringing the market down a little bit now at the moment, and sentiment. I think Netflix did a little bit yesterday as well, because when you see earnings drop 10% in like one candle, and then even though Netflix ended up bouncing all the way back, but the sentiment of it is like, okay, so if Netflix is dropping this much in like one candle, and Tesla is dropping 5% earnings, and big tech earnings are coming up next week. So Microsoft, Amazon, and Google are reporting. Meta as well reporting next week. Apple is the week after. So if all these big techs are reporting soon, why are we like gambling on holding QQQ or all these stocks, right? If every earnings reports are dropping this much percentage. So there's likely a little bit of a sentiment shift. We'll see if tomorrow it actually shifts or not, because it's still been pretty slow as of lately. And let's get into the other big tech stocks. So Tesla, I did a 6-minute video today as well on breaking down Tesla already. So just do it real quick here. It broke out of our wedge, teal looking wedge. And I'm looking at the next support would be this weekly support down here. See this here? If we do break that, then it's a weekly downtrend. Right now we have confirmed a daily downtrend already. So very follow through tomorrow. then it is all through of the daily downtrend. And we're likely going to head into here. And yeah, check that 6-minute video out on my YouTube long form. And I did a detailed breakdown of just Tesla by itself. So now let's go to Apple. This resistant guide over here, 1, 2, 3, 4 touch has broken bull out of it. Oops. That's my Tesla video. So I do think we actually back tested it. So we touched it again this morning and we came back up to it and bounced off of it. Actually, that's a good sign for the bulls. But if I'm a Apple bull holding right now, I'll be a little bit wary. Is the right word to put it, because no one else is breaking resistance yet except Apple. And if we do see every other big tech stock start following breaking resistance, then we'll be like, okay, this is a good sign, then for the bulls, we can all play bullish in one direction. So as for now, Apple, there is resistance here again now in another resistance zone for this orange line, 171 and 167. You can see back here all this test of resistance down here and here. So that's what I'll be watching. And QQQ will still be my guide, even though Apple broke above this long-term downtrending line. And let's check out Microsoft. So Microsoft, has not broken above this. It's been testing for quite a while. You can see all this time it's been tested. 1, 2, 3, 4. Couldn't get over it. And then back here, 1, 2, 3 times. 3 tries here. Couldn't get over it. And if it gets over it, it'll likely fill this gap. You can see this gap here. So as of now, it has not. Maybe it'll test it again. We bounced today. But we haven't tested it yet. We'll see if Microsoft does test it or not, or just going to wait till next week's earnings. It's going to be on, what is it on? Let's see here. Microsoft's earning would be on the 25th. So that's literally next Tuesday. So I'm going to say it's going to go sideways into earnings, because that's only a couple of days left for Microsoft to trade. Say I would say we would likely trade within this range into earnings for sure. And let's see, Amazon is also testing its resistance, but I would say Amazon is the most likely to break above its resistance due to how weak it's been. It's literally done nothing in the past 2 years, and if it breaks, there's no big deal. Nobody really would be surprised because of how little it's been moving compared to every other tech stock. If you scroll back, if you look at Amazon literally went completely sideways for a whole year, while the QQQ was making new highs week after week. And all the other tech stocks were making new highs after new highs. Essentially, Amazon, I would say, is the weakest stock of the big tech, other than Meta, which just went down the drain because of its rebranding, all that stuff. But that doesn't matter. I never liked that stock. But yeah, I would say Amazon will be very likely breaking this one. Unless QQQ decides to just roll over tomorrow, which is doing right now, then it'll just reject it again. But even if it does break over, it's not a big deal. It could just come back up to this level right there, and then just trade within here, chop up and down. That's the most likely scenario for Amazon. It's pretty weak, and it has also earnings coming up as well on the 27th. So Meta, Amazon, and Microsoft are all coming up. Where is my Google? Oh, there it is. And Google is also reporting on Tuesday with Microsoft. It's going to be a big Tuesday for sure. And especially the very first one of the big techs, if they report bad, the whole market is going to assume every other big tech is going to report bad, because they are pretty related. Even though some of the sectors aren't, even the business, some of them aren't completely related. They usually report pretty similar. Other than Apple's sometimes a bit better than other ones, but we'll see if the demands are lower for Apple as well. And what was it? Oh yeah, Google's resistance. So this is the uptrending line. Resistance, you can see 1, 2, 3 touches. This is a visual guide for me. The horizontal line is more of the stronger resistance. You can see we have tested here as support, bounce it off support again, and now it acts as a resistance when we're under it. It's vice versa. So when it's support, it becomes resistance, or the resistance becomes support, depending on which, if you're under it or above it. And yep, Google has rejected here as well a couple of times. You can see that even if we got over a couple of times, we never really like stay above it that long. See, like we got it close above it, next day we're like down again. Stayed above it one day, and next day we're down again. So still a valid resistance. These are two things I'll be keeping in line, this one and this one. And yeah, Google will be reporting as well on Tuesday. So I'm going to say likely trade within sideways within here until Tuesday. It's either going to be sideways or down. That's my guesses. But I'm putting my money on the line for the semiconductor sector. So let's take a look. So SOXX. You can use SMH or SOXX. It's up to you. But so I have bought SOXS, which is the leverage 3x ETF of bearish, while for XYX, meaning if this ETF semiconductor XYX drops 3%, since I'm bearish on it, XOSS will be up 9% because it's a 3x of your leverage ETF. So you can see I have mentioned to you guys, I bought it up here. I shorted it. My initial short was here 2 weeks ago, and due to a potential head and shoulders forming, so I decided to top fish it to see if I can get the top, and I did actually. So after this significant move, which you can see is the inverse of it because I shorted it right there, and it was a nice drop, roughly 5-6%. So I took profit on XOXS, which because 5 to 6% of a drop gets me 19%. So that was my best week ever because I had a really large size position and up 20%, and that was 20% gain was just a lot for me, and I took profit right away. And I was like, it was also Friday too. I remember when I took profit, so I didn't want to hold over the weekend. And then it bounced a little bit, and I got back in again, roughly around here on the screen candle. I got in a little bit early. I was red the next day, but I noticed it was relatively a lot weaker than QQQ. So I decided to hold on to it because while QQQ was going completely sideways, as we have seen, XOXX was actually flat to negative, slight negative. So I was like, okay, so if QQQ is going to continue going sideways, I have no problem holding my semiconductor short as long as QQQ isn't breaking above this range. So so I'm still holding. It's because it's been 2 weeks since this is still playing it out. So if QQQ, let's say QQQ goes like this, boom, right? Then I am out of XOXS short. Like if it breaks this level up and then we retest it and then bounced off of that, I'm out. I'm like, yeah. But I am hoping for a bear break here. So if we do get bear break, then XOXX is going to break even harder in QQQ due to it being relatively weaker. If that makes sense for you guys. Yeah, that's the reason for relatively weakness and relative strength when you play different sectors. And as of now, some of you guys are in it with me at the moment, so we are positioned very, very well. So it's been bouncing off of this level, I think 7 times at least, and I am hoping later this week or next week it's gonna break. And so far, we are positioned very well for the bears because if QQQ just drops like 1%, this is gonna break down towards this cluster of volume. So target would be roughly around this area down here, or anywhere within here for me. And I'll likely take profit and then re-enter if continue of QQQ weakness. So yeah, it's a good 5%. That means the leverage 3x ETF will be a 15% gain, and 15% with a large position is quite a bit for me. So I'll likely take profit if we do get it hard, especially if it's a hard drop. The faster it drops, the faster it drops within a smaller time frame, the more likely I'm going to take profit due to amount of. If it's a shorter time frame, for example, if it drops within like 4 hours, then I'm out because usually they will have a quick bounce due to how hard and fast it's been selling. But if it's like a slow, like a slow grind down, we have a bounce a little bit and a bounce that cools off all the indicators, and then I'll likely still be holding. And there's no need to react, because if you, let's say, versus something like boom, like a waterfall, it will have a decent bounce and then it will go again. So I want to be out for that, because sometimes those bounces are really big. Sometimes they retrace 50% of those bounces. So if it drops all the way here, retrace 50%. That's like 3% of the move that's gone. If it retraces half of it, right? 3% of a leverage 3x ETF is 9%. You don't want it to be. I mean, unless you can ride it out emotionally, that's up to you. But for me, I don't want to see half of my gains gone based on that. And yeah, today is a very long update video, very detailed breakdown for you guys. Just happened to be thinking about all this stuff. And so yeah, feel free to subscribe. I do daily market updates, and let me know if you guys got any questions or anything you guys want to talk about. Let me know in the comments, and I will see you guys around tomorrow. I will be updating the market again. And yeah, see you guys around.